What's going on, everyone? It's Farhad, and let's talk real estate, specifically the Toronto market. Now, you've probably heard whispers of a downturn, maybe seen some headlines, and you might be thinking, is this the right time to buy? And you know what? You're asking the right questions. See, most people, they get spooked by a little dip in the market. They think it's all downhill from there. But the smart money, the folks who build real wealth, they know that a downturn is where the real opportunities are hiding. So in this video, we're gonna break down exactly why buying during a market decline can be an absolute goldmine, especially here in Toronto. We'll dive into the nitty-gritty, the strategies, and everything you need to know to come out on top. So if you're ready to stop listening to the noise and start making smart strategic moves in this market, hit that subscribe button because you're in the right place. Alright, let's cut straight to the chase. When the market takes a dip, guess what happens? Prices drop. It's basic economics, supply and demand. Suddenly, those properties that were going for crazy amounts, they become way more attainable. And this isn't about trying to time the market perfectly. Nobody can do that. This is about understanding that downturns naturally create buying opportunities. Think about it. Would you rather buy a car at full price or wait for a sale and get a much better deal? This is the same principle at play. Now, I know what you might be thinking, but Farhad, what if prices drop even further after I buy? And hey, it's a valid concern. But here's the thing. Even if prices dip a little more in the short term, over the long haul, real estate tends to appreciate. So by buying in a downturn, you're essentially buying low, which sets you up for potentially huge gains down the line. Now, let's talk about the bounce back because that's where things get really exciting. See, real estate markets move in cycles. What goes down must come up. History has shown this time and time again. Remember the 2008 crash? Yeah, a lot of people panicked. But those who held on to their properties, or even better, bought during that time, they made out like bandits when the market rebounded, and it rebounded strong. And the same thing is gonna happen here in Toronto. This city is a global powerhouse. We've got a strong economy, a diverse population, and people are always gonna want to live here. So when you buy during a downturn, you're not just buying a property, you're investing in its future appreciation. You're essentially getting in on the ground floor of the next upswing. Let's talk inventory for a second. In a hot market, everyone's fighting over the same few properties, right? It's like a bidding war frenzy. But during a downturn, the script flips. Suddenly, there are more properties on the market than there are buyers. This means you have more options to choose from, you can be more picky, and you're not as rushed into making a decision. You can take your time, do your due diligence, and find the property that truly meets your needs and your budget. No more settling for the okay option because it's the only one left. Now, this is where things get really interesting. Negotiation power. In a seller's market, you're often stuck paying a premium, maybe even over asking price. But in a downturn, you have the upper hand. Sellers are more motivated to make a deal because they don't have a line of eager buyers knocking down their door. This means you can negotiate harder, potentially score a lower price, get closing costs covered, or even ask for additional perks to be thrown in. Remember, everything is negotiable. So don't be afraid to play hardball, make your offer, and see what happens. You might be surprised at how much leverage you actually have. Finally, let's not forget about the power of rental income. Now you might be thinking, Graham, who's gonna rent my property during a downturn? But here's the thing. People always need a place to live regardless of the market. In fact, during downturns, more people might be hesitant to buy, which actually increases the demand for rentals. So if you're buying a property, consider its rental potential. Could it generate passive income while you wait for the market to appreciate? Having that rental income stream can offset your mortgage payments, provide financial stability, and make your investment even more lucrative in the long run. So, there you have it. Buying property during a market decline might seem counterintuitive at first, but as we've discussed, it can be incredibly advantageous. You have the potential for lower purchase prices, higher appreciation, a wider selection of properties, more negotiation power, and even the possibility of generating rental income. Remember, real estate is a long game. It's about making smart, strategic moves that set you up for success years down the line. And right now, the Toronto market is presenting a unique window of opportunity for those who are willing to seize it. I hope this video was helpful. If you are willing to take this opportunity and getting started with your Toronto real estate investment, contact me now and let's discuss further.